There's obviously lots of different reasons to get excited about dividend growth investing. If you had to laser focus on one or two that just makes you the most excited about this kind of investing style, how would you describe that?
Well, for me, it's really about growing an income stream. There are two components to dividend growth investing, obviously. One is dividends. You get paid for owning a little share of a company, which is so cool. If you own 10 stocks, you own pieces of 10 companies, which is great. I own a little bit more than 10, but nevertheless, it's fun to drive by, say, McDonald's or Home Depot, and know that you own a piece of that company. But the second component is the growth component. And, I invest in dividend growth companies, meaning these companies pay dividends, but they also raise their dividends every year. And so you have this built-in income growth, which is super awesome. It just means that you are almost guaranteed a raise every year, and you can make money, you can increase your income, you can invest more using that dividend income, and sort of do compounding in two. You get the growth from the dividend growth stocks, but you can also get growth by just reinvesting that income flow into more stocks, and it's sort of a double compounding effect, which is fantastic.
Yeah, you're speaking Andrew's love language, because that's what we've been talking about for almost 5+ years. So it's nice to hear it from another voice, that's for sure.
Do you find that there are misconceptions around dividend growth investing, things that investors should think about and use it to maybe pay more attention and not write off dividend growth investing as some stereotype?
I think one of the things to really understand is that there, as I mentioned earlier, there are two components. As a beginner, I made the mistake of chasing yield, and I think a lot of beginner dividend growth investors make that mistake. And it turns out that, about a very large percentage of very high yielding stocks are actually not very good stocks, very high quality stocks to own. It's really important to see quality in dividend growth, because the idea is to try and invest in something for the very long term, years, decades, if you have that long. And so it's important to choose the highest quality stocks. And I think the other component to this is that you want to try and stay with a company and stay with the stock, because that gives you the best opportunity to grow your income stream. I think if you come to dividend growth investing with a trader's mentality, then, there are things that are at odds. A trader wants to, buy low and sell high. A dividend growth investor wants to buy low and collect income. From a sort of a value standpoint, that gives you the best opportunity to grow. But for me, I would rather buy a high quality company, even at a small premium, than to buy substandard or mediocre companies at a discount, right? For this reason is that you're going to be in the stock for a very, very long time. With high quality dividend growth stocks, the so-called blue chip dividend growth stocks, they rarely trade at a huge discount, just precisely because they're really good stock. As soon as their yield climbs, people get into it and drives the yield down again. And so therefore, if I have a system where I look at the quality through some metrics, do a quality assessment, and for the highest quality stocks, I'm willing to pay up to 10% above fair value, because I realize that to get into those very high quality stocks, you have to pay a bit of a premium.
Can you give us an example of, you mentioned metrics to determine quality. Can you give us one example of that?
Yeah, there are different metrics. I use a system that developed by a Seeking Alpha author called David Van Napp. And he had this snapshot quality assessment. Uses 5 metrics, and over the past 3 years or so, I've really grown to trust this system as a way to filter really good quality stocks. Things like the S&P credit rating, Morningstar's moat rating, Value Line has 2 quality metrics that contribute to this score. And then one that I've also grown to trust a lot is Simply Safe Dividend's dividend safety score. So there are 5 of these elements that contribute to making up a score that I then utilize to pick candidates for investing.